Welcome to a quick whiskey, games, and nerd stuff. And today's nerd stuff is we're briefly going to talk about an article I came across in the May 31st edition of The Economist. It's ETF madness. I have a feeling we're going to see a lot of this stuff in the news. Do not take this as financial advice. I just thought it was interesting. Finance is an industry of ceaseless experimentation. The experiments which pay off are quickly copied and propagated throughout the market. That is often for the good. But left unchecked, innovation places intolerable risks on the investors and the financial systems. Consider exchange-traded funds, ETFs. There have been 340 ETFs launched in America this year, around 50% more than during the same period last year. Leveraged ETFs are predominantly an American phenomenon. And I'm skipping around in this article, just kind of highlighted some talking points. Most of these funds seem designed to incinerate investors' money in addition to their volatility, and unlike their low-cost forebearers, they charge higher fee rates, and leveraged ETFs approach those levied by hedge funds. And then kind of talks about some of the things that's going to happen. A more hypothetical but potentially more severe worry involves the mechanisms that allow ETFs to function in the first place. When the price of an ETF differs from the value of the securities it holds, financial institutions, often hedge funds, create and redeem ETF shares to close the gap. This arbitrage opportunity keeps the value of the ETFs in line with their holdings, underpinning investors' faith in the funds. Recent volatility has led to some uncomfortably large gaps between ETFs and the value of the assets they hold, particularly where those assets were liquidated loans. More complex products and volatility could test the process further, perhaps to its limits. Even if it does not, these new funds indicate that the market is becoming a casino. Again, this is not financial advice. This is just a personal opinion, where I think that you're going to see more about this in the news because you're going to have people and institutions that are getting into this that are getting it over their heads. Similar to what happened with the housing market and what always seems to happen in the financial markets. Until next time, folks, cheers.